I'd like to call to order the February 4th, 2020 Finance Committee regular meeting. Would you call roll, please?
Chairman Reinhardt.
Here.
Vice Chair Gonzalez.
Here.
Member Gardner.
Here.
Member Darnell.
Here.
Member Brown.
Here.
All right, thank you very much. Happy New Year, everyone. Welcome back. It's our first meeting. A lot of notes to be reviewing, but first we have Mayor would like to do a presentation. Turn it over to.
On behalf of the City Council and certainly the City of St. Cloud, and personally, I'd like to thank all of you for the work and the time and the gifts that you invest into working on the Finance Committee. I just want to say thank you. Appreciate it. You're unsung heroes, and what you do is very invaluable, very important, and we just want to thank you for that. We have a small gift from the city we'd like to give each of you. Just a small token. There's no way we could repay you, but just a small token of appreciation just to say thank you for what you do.
Oh, yeah.
Thank you, old man. Appreciate you guys. Thank you so much.
Thank you very much.
Appreciate all you do.
Sweet.
And thank you guys too. All right. Thank you, Tours.
All right, first on the agenda is the minutes. If anyone, we can start, let's first review the minutes if you haven't already. I know they sent us the minutes, there was a lot of them to review. If there's any questions about the minutes, let's address them beforehand, before making our recommendation.
Are we going to do one set at a time?
Yes, we have to do the 22nd. Looks like meeting 1, meeting 2, meeting 3, and then we can do our meeting from October.
Okay.
I have a question, Wendy, in regards to, I was looking through the minutes, and I didn't see it on our agenda, but we had talked about the matrix and them coming in January, actually coming in December, and then January they would be presenting to council. Will we be able to get a brief on that, or?
We just got a status on the Monday directors meeting, and Matrix is scheduling interviews with all the, they're at the divisional side, talking to all the divisions about their structure, the organizational chart. They're meeting with finance, procurement, PD, FD. They start February 10th is the first rounds of meetings, and they'll finish up before the end of February to have preliminary ideas of the organization and structure, and then it'll move into recommendations, and then they'll meet with the council. So they're here. It's actually was in January they would be here or conducting surveys, and then they'll do their findings, start their work in preliminary once they understand our makeup, and then go from there for council, which I don't think we have a projected date really. I don't know exactly. It would be more of a, once they brief Bill, of their findings, maybe he'll get a better idea as to when they'll go to council for that. But they're on track, and they're like I
was
said.
just looking at our notes, and they said they were coming in December. And so
Yes, they were sending information in December, and they were going to have boots on the ground, what we call it, in January, and which they are, February 10th, sorry, is when they start. So I think the holidays pushed it down maybe a month, but
Just
we're on
curious,
track.
I didn't see it on here, so I didn't know if it's just getting underway, so I'm sure we'll hear about it later. Any other questions about the minutes at all?
No, I'd like to go ahead and make a motion to approve Finance Committee January 22nd, meeting number 1 minutes.
Recommendation for approval of minutes for the first meeting of July 22nd.
Second motion.
Second. All in favor, say aye.
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 Passes 5-0.
Meeting number 2 minutes, the only thing, thank you for re-going over those, Wendy, I appreciate it. The only thing on the second page, second paragraph, Member Gardner asked if we have a grant writer. That's what it should be, and it just says, do we have a grant? And I was wanting to know if we had a grant writer in position for the city of St. Cloud. So just need that small
The writer,
adjustment made there. Mhm.
You got it. Okay.
I'm feeling it too. If you make a recommendation, if you just had the adjustment that Ms. Gardner had. For meeting number 2, same July 22nd.
See that? What was the recommendation by Ms. Garner?
She just had, she asked in the meeting if there was a grant writer, and it says, is there a grant?
That we do have a grant writer?
Yeah, that was the question
Right.
that didn't have it, though, and there it read.
Oh, that it
We
was,
have-
okay, so there, okay.
So just the
So we make a
adjustment.
motion that July's number 2 meeting on July 22nd, 2019, that the recommendation that to correct the grant person, is that what it was? We need a, okay, so we got that motion.
Got a recommendation for approval with the corrections made by Ms. Gardner. Do I have a second?
Second.
Have a second. All in favor, say aye.
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 All right, passes 5-0. You on a roll, Landon?
I'll make a motion to approve July 22nd, 2019 meeting number 3.
Recommendation for approval for number 3. Do I have a second?
Second.
Second, all in favor, say aye.
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 Passes 5-0. Now it's for the approval of the October 23rd meeting that we had, our last meeting.
The only thing I would like to see possibly added to that meeting too, which again, great notes, is that if it's possible, if we could get the meeting minutes emailed a week after the meeting. I know we discussed it, it's just not on here. And with the fact that it didn't happen this time, I just want to see that it's in there.
Yes, ma'am, we could definitely do that. So October 23rd, 2019, to note that Ms. Gertner would like minutes delivered 1 week after the actual committee meeting, and we'll add that to the notes as well for record.
If we can do that moving forward, then we can, it's much more fresh in our minds to be able to be more accurate.
Yeah, everybody's old up here except for one.
I don't mind being the young one, so it's all right.
We used to have brains that good, Jeremy. We used to, okay?
I'm still working on it.
So is that a recommendation, Jeanette?
Yeah, that it just be added to the October 29th minutes.
So I have a recommendation for approval with the addition. Do I have a second?
Second.
All in favor, say aye.
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 Aye, passes 5-0. Beautiful.
4-0. I wasn't here, so I can't.
You weren't here. Thought you mumbled.
No, he didn't. I looked at him.
That passes 4-0. He chose to miss the meeting.
Yes, you skipper.
Just lucky to have him today.
You just said that.
All right, let's get started with the previous business, is an update on Parks and Recreation Master Plan.
To update the committee, you should have received in your emails with everything attached, the Parks and Recreation Master Plan, which is available, and you were given the location, so that has been completed. Included with it is the Master Plan for Trails as promised, so that is completed for you for your review at any time. We did not print the copy just because it exceeds 200 pages, so thought it wasn't great use of paper. And that covers item number 1 for you, just an update with that.
Anybody have any questions in regards to that? All right. The update on the tour?
The update on the tour was really a question to pose to the committee due to the notes that were from the previous, before the holidays, and we were in that fog, and just making sure you all wanted to maybe take a tour that Mr. Chairman Reinhardt suggested to see the fire department and police department and the public services to kind of connect the budget and what's going on with the actual location. So we just want to make sure if you guys wanted to mention this committee, meeting, if you're going to firm up a date, is it still valid for you? Because we have it as a to-do that you listed on your notes. So that was a discussion point for you all.
All right. It was just something that I just participated in, and a few months ago, I'm on a committee, and it was just a very eye-opening experience to get firsthand when we hear a lot of people presenting issues with their budget and why and what, but to physically see the issues, I think, will be more impactful. I think you'll be very surprised to see some things that are in place right now that need addressing immediately. And I just think it'd be a good idea.
Yeah, I recall us discussing this in length, and even at the last end of the minutes on October 29th, you asked if everyone was in agreement in visiting the facilities, in which we were. We agreed at that time. And then, do you like to be called Miss Colazzo or Wendy?
Wendy's just fine. I like to keep it simple.
It's so official. You had just stated that you were going to talk to the city manager and get his kind of approval from that, and then we were just kind of waiting on dates.
Okay, so that's what I wanted to just double check, because I think, I kind of, got that in the crosshairs, is if you'd like to recommend to me, because of your schedule, like, we think, whatever it may be, April or more conducive to the budget schedule, I'll do that to ask Mr. Sturgeon what I need to do to coordinate that for you all and confirm it, through email so that occurs for you. So if you, I know there was the comment on the minutes where right before budget, when that happens, it would be nice to kind of see that so it's fresh in your mind. So I can offer you some dates through email that may work for you all, and you could say yay or nay, and then I will talk to Mr. Sturgeon and find out, what we need to do and make sure you get escorted and, walk through and you get the whole full experience. And then we'll confirm that date if that works for everybody.
I think that'll work. It'd probably be best, I'm just thinking out loud here, it's up to you guys, maybe a smidgen before summer, because you guys might be doing summer trips or plans, so maybe at the latest May of some point might be the best time, so we don't interfere with vacations. The sooner we get dates, we can then start looking at our calendars and go, hey, I can do it. It's not a mandatory thing, so it doesn't count against you, but I think it'll be a huge asset and a benefit for you once you see some of these things, and then when you hear them coming to us, it's right to the point. You'll understand what's going on for a lot of it. So I would shoot for that if that's good with everybody. Even if you have to push April, May type of thing, I think that would be fine.
Okay, so I'll put down May and get some dates together, and I'll confirm with the city manager, and then get you some solid time so you can see if that works for your schedule.
How is this time for most of you guys? Pretty good, 6 o'clock-ish? Okay. Are you able to make it with your schedule at all? Or would you prefer like 6:30? Would it be easier for you?
6 is fine.
Because we would meet, the way we've been doing it is we would meet at the PD, and then we do the tour, and then that last time they actually bussed us to all the departments.
Yes, sir.
We could possibly get them in an evening, at least the police and fire. I don't know about Parks and Rec and Public Works and things like that, but I think we can get those two. And so it might be a couple-day event and counting on how they can do it, whatever they can do.
Yes, sir. I'll confirm, since they've done one before, how they coordinate that. That way I can give you some firm dates to see if it works for everybody.
Perfect.
And I'll shoot for May.
All right. Current business.
All right. So we are reporting fiscal year 1920 first quarter budget. Two components to this as we go, before I start going through the report, is one, in essence, of the promise I made when I first came on board, to give you more robust reporting. So we're doing the standard quarterly report, and then I've taken that, and you'll have a separate package which has your operational revenue report, and that just pretty much layman terms everything, and some of the things that I thought would be interesting to you, like population, FTEs compared, and we'll go through that rather quickly. But this, you'll get your overview, and then really your executive summary that you requested. And it's kind of a test run since it's first quarter. I want to start the quarter right. If there's some more reporting, some of the printing kind of got a little ugly, with color and everything. We'll fix that, but just wanted to brief you on that, and please feel free to give some recommendations if you'd like to see something else or it's not valuable at all to you. All right, so here we go.
Thank you.
As always, the purpose of the presentation is to present the first quarter, which is covering October 1st, 2019 through December 31st of 2019, unaudited as of that date. This is an overview of all revenues and expenditures, and then key department statistics for this current fiscal year. We begin, of course, with our top 10 revenues. We are currently, just for markers and statistics, we are at 25% for the year of budget. So ad valorem taxes came in budgeted at $12.5 million, and actual performance is 9.2. Sewer service fees were at $12.9 million, and actually first quarter realized $3.2 million at 25% of budget. Water service fees were at $12.4 million, and actual performance was $3.1 million, keeping a steady 25%. Impact fees budgeted for this year at 9.8, and current actual performance is at 3.5, exceeding the 25% at this point with 36% performance of budget. Infrastructure sales tax, the 1%, $7.7 million, $381,366, a 5% performance. Public service utility taxes, $3.4 million, with actuals at $494,000, with a 14% of budget performance. County gas taxes, 1.5 budgeted, $114,292 at an 8% performance of budget. And refuse service fees, $13,385,785 with actual performance of $2,872,616, 21% of budget. Coming in ninth, stormwater service fees with $2.1 million in budget and actual performance of $520,824 at 25% of budget. And the St. Cloud Interlocal, OUC Interlocal agreement coming in at $7.5 million for budget and actual performance of $1.9 million at 25%. Overall, the top 10 revenues came in at $83 million, $83.6 million with an actual performance of $25.5 million, giving us an average percent of budget of 31%, exceeding current markers between the 25% to 31 difference.
The budget amounts, they include any fund balances in that? The beginning fund balance?
Yes, sir, they do. And I give you that breakout in the following ones for you to have.
Okay.
Major fund revenues, as spoken, the budget includes $14,013,301 estimated in prior year fund balance inclusive in those amounts. So for the general fund, a budgeted amount of $51.9 million with actual revenues at 15.3, putting us at 30% of budget. The water fund, $17,401,135 with actuals at $4.2 million at 24% of budget. The sewer fund at $15.5 million with actuals at $4,128,007, 27% of budget. Sanitation fund, $13,486 with actual performance at $2.8 million with 21% of budget. The St. Cloud Interlocal is at $7.5 million with actuals at $1.9 million with a 25% of budget performance. The building fund coming in at budgeted $5.3 million and actual performance at $681,301 at 13% of budget. And finally, stormwater fund, $2.8 million in budget, $534,000 in actual and with a 19% performance of budget. Any questions, please feel free to stop me and I will answer them. Major fund expenditures, general fund, we budgeted $51.9 million. This includes actuals that are inclusive of encumbrances. So $10.1 million is actuals for the general fund, putting us at 19% of budget. The water fund budgeted at $17.4 in expenditures and current performance of expenditures at $4.5 million, putting us at 26% of budget. Sewer coming in with a budget of $15.5 million, actual performance of expenditures at $3.6 million, putting us under at 23%. Sanitation fund budgeted at $13.4, with actuals at $6.4 million and putting us in at 48% of budget. St. Cloud Interlocal, 7.5 in budget, and actual expenditures at 1.7, putting us at 23% of budget. Building fund, a budget of 5.3, with actuals at 491,205, that's 9%. And stormwater fund at $2.8 million in budget and actuals at 532, putting us at 19%. The budget included numbers are $8.7 million in city council's contingency. And then also the budget includes $90,892 of contingency for the St. Cloud Interlocal Fund, inclusive in those budget numbers.
Does everything seem on point to you, or is there anything that you would like, something needs to happen here soon?
I'll note to you the sanitation fund. So expenditures are at 48% at a 25% of budget. So we are exceeding and running, burning cash faster. And that was expected just because, one, we have some of the rates going up to cover the gate fees. It's been quite a difficult thing to kind of find that balance with the sanitation fund to afford itself. So that's expected, but we're monitoring that because technically it's almost double the amount in a 1/4 burn. So we're watching that at this point. We're not fearful of it. It was expected. So, we have some, obviously the gate fees going up. We'll change some things on that. And we're looking at the methods to make sure that obviously we're covering for this fund. But, just to note for you, percentage-wise, like I said, we burn twice as much in less amount of time. The major funds surplus and deficit report. In the general fund, doing the math here, 15,000,003 in revenues with actual encumbrances at 10.8 puts us at a surplus at this point of $5.2 million, which we'll cover in your executive summary as well. The water fund at $4.2 million with actual encumbrances at 4.5 puts us at a deficit of $358,000. Sewer fund 4.1 with actual encumbrances at 3.6, putting us in a surplus of $481,000. Sanitation fund, the $2.8 million in revenue, actual and inclusive of encumbrances is $6,000,004, putting us at a deficit of 3.5. St. Cloud Interlocal, revenues at 1.9, actual inclusive of encumbrances at 1.7, putting us at a 141K surplus. Building fund, 681,000 in rev. Actual expenditures with encumbrances is 491K, putting us at a surplus of 190K. And finally, the stormwater fund at 534 of revenues with 532 coming in at an easy 1,961 surplus. Be mindful that these numbers, such as those 358 deficits in the water fund and sanitation fund, these actual numbers include encumbrances because it is expected to spend, but not necessarily meaning we will spend it. But we have to include it and take it in consideration that we have those encumbrances and those dollars committed. So reasons why you would see a deficit.
So you said you somewhat expected that kind of spending in the sanitation fund. What is making it at such a greater expense this quarter?
So some of the drivers we've seen is really labor. It's really what's pushing it. It's not that we've added new people or anything of that nature, but the routes have been, there's timing issues that are happening, more routes, more stops. I mean, a 2.3 second stop adds a couple dollars. So there was some of the issues on what we were doing with trash lids and things like that added how many minutes you stop at a route. So the route increase on an 8-hour has gone up a little bit. We also had some special kind of pay issues in the labor department, which then what happens is FICA, all the benefits come into play and all the fringe for the company come into play to pay for this. So we expected it, like I said, they were short on some for some time as they were trying to staff people to cover these routes. I think we're levelizing now. That's why we expect a change in that, to cover what we have. And the area is also different from the last quarter. It has increased with all this annex property, things of that nature. So we had a couple drivers going on, but we had talked about it before and expected, like I said, some shift in first quarter reports itself.
Did we see this jump in the fourth quarter of last year?
Not as as a good, really big spike, we did not. We actually ended up, I mean, because we balance over the lines at the end of the year, so we were already talking about 2020 having this start because we were, really the fees where we were, it wasn't covering certain things, you know what I mean? We have to set accurate billable rates for it too. That's all this work in process that we're doing for it. So we wanted to see what the spike would be because we couldn't really quantify it because it's never been done to really measure up how much we need to be charging to cover the cost, you know, and also we didn't know what the market would give us with, you know, raw materials and costs to do operations. That's also gone up as well to support the services. So not only like labor is not the only big thing, but some raw services have really gone up in what we're spending. So we're trying to kind of hone in with the directors on that, and they're working towards really finding these drivers and reviewing it so we can put a plan in effect.
I don't know, I just think 3 million's a lot of money, and not directed at you at all, because, I mean, you just pull the numbers together. It's just, you know, you wonder what's, I hope that's all that's going on, because that just seems a lot in labor and all that good stuff, so.
Yeah, and I guess I don't cringe at the $3 million also because when I reviewed it, the inclusiveness of the encumbrances make a big change, and as we see that costs are going up, we definitely might not do some of the purchases that we anticipated to do because the fund isn't performing. So a lot of it, that very 3.5 number is coming from the encumbrances out there, but we do adjust it based on the performance of the fund too. So I guess that's where I get the confidence from that, you know, so we won't just let it bleed like that.
On something like that, we should probably put, like you had footnotes in the other pages, like how much of the encumbrance is on that, so then we could say, all right, well, there's 3 million encumbrances, and we would definitely know that, you know, it's just open POs and not expenditures.
Sure. Okay, we will add that.
Because, you know, since I've been on this board, sanitation's always been a problem, and they talked about doing studies and other things, and then last year it just went away, and
This year it's going on right now. We do have a consultant doing all impact, mobility, the water fund, the sewer fund, our sanitation fund is getting reviewed now. And they just started that work up. They have pulled trial balances, all the information. So we should get a economic study review on it, you know, to let us know where we are in the market, one, and two, what do we have to do where we are? Because we need that data too for council to be supported, and we're not just raising rates for anything. So
Right.
that is happening right now.
okay.
Mhm. General fund expenditures, city council with a reminder of the $8.7 million in contingency budgeted on that, a 9.2 budget with actuals at 158,000. City manager.
Hey, Wendy, I'm
yes.
sorry to interrupt.
Yes.
Up to you guys. I just don't want you to have to sit here and read every single line. I
Sure.
think it's, I'd rather you go,
I concur.
yeah, I'd rather you go, okay, the
That's concerning.
legal services are at 60% and this
Okay.
is why, or this is too low and this is why. If we're
Absolutely.
all within ranges, I appreciate what you're doing, but
Okay.
we don't need you to do all that.
Perfect. So just markers to hit. Obviously, that 2% in the city council is skewed by the $8.7 million in contingency. You all know that. The 60% in legal services, we have had quite an increase on legal activity that we've needed to assess, such as the leachate issue. We've had, you know, every time it's used, and there's been more activity in that public records requests that have happened. That's what I see from the expenditure side that pulled that cost. So we should slow down on it. We expect to, but that is what caused the biggest spike in that. You know, a lot of it is obviously at with the city clerk and all that they have items that they need to, and they just had an influx of it first quarter. We don't expect that to be a constant expenditure. Everything else other than information technology, I don't think the spike is a huge spike. It's 33%. We're at 25% of budget. They have always expended 80% of budget and kept 20%. So we're going to levelize with that. We did have the deployment of Track It OpenGov is going on, so we've had licensing that actually went into that, and we actually deployed, Track It in December. So we had some additional cost in coding, some scripts that needed to, and those hit already. We needed some additional licenses, so that kind of spiked the number as we brought it live. We should expect another spike in second quarter in the same way for OpenGov as we are projected. My goal is to have it launched by the end of February. We have most of it done now, but we are trying to keep with the budget schedule. And we will anticipate to use OpenGov for the first time this year with the budget and see all this magic. So it looks promising and everybody's excited about that. Other than that, everybody is in tune within the 25% of budget there. We averaged overall over the city with expenditures at 23%, which has always stayed in tune with that. So other than that, I don't have any additional to turn for you. That concludes this part. I did not put it in a presentation, obviously. I put it on for you because I wanted to just put it in here in the minutes for you to take a look at this. And is this a report that's going to work for you and valuable information? The objective is that while we have this executive summary will review everything for you a little bit more detail and kind of show you that performance with graphics and where we are with both the general fund projections, same information, but just really now giving you the drivers that I promised you. What is it gonna look like? For example, third page is the general fund, which we just went over, and it tells you the percent of budget that now is remaining. So it's the inverse, right? How much we spent, we still have 98%, and you can do the math. We're at a quarter, we should be at 75% of budget. So anything above, we're doing very well. It includes the contingency, of course, of 8.7. So that gives you a picture of where we are overall on the general fund, giving us an 81% left in budget. So we are well in tune. Following that, and we'll fix sizing for you as well, because this profession has taken my eyes as I noticed. But one of the key indicators I want you to look at is we have revenues now by how much did we get in taxes, in permits, in charges for services, fines and forfeitures. And then the expenditures commensurate to that. So we're going to do really quick math because it's been a question here at the committee, wow, we can't get those numbers really easy. $15 million came in, we got $10 million out, $5 million remain. Then I took it and got a little bit fancier for you, and those transfers that you see there for $3 million are transfers that we get into the general fund from other funding. But taking that out, because I've already reported it as coming into revenue, you look at the net difference, the net change in fund balances from when we started at the beginning of the year to when we are, plus that $5 million, and the transfers that we've already included in revenues. And we're projected to end the year at about $15 million in fund balance. What does that mean? 13% increase over the year. So now it's actually telling you hey, we're projected to increase by 13% over this year if we keep this pace. I always forewarn everybody, first quarter is always fat. You know what I mean? Because we get the majority of our ad valorem. We're only waiting on those that are on payment plans and things. So first quarter always looks great. Then we get lean second quarter and kind of stretch third quarter, and then all of a sudden we kind of absorb everything in fourth quarter and clean it up. But this is a steady projection for you to expect about a 13%, which is a healthy, very healthy increase to your fund balance for the general fund. The next couple of pages that I put there is really I'm a person that doesn't matter how many times you ask me the question, I like to be clear. And so I thought some people would like to read and really say, what is an ad valorem tax, or what is a surcharge tax, and what does it involve, and how do you calculate it, and all these questions. So I added that information for your nightly reading if you'd like, and it kind of tells you how we calculate income and seniors and real estate, and then gives you the performance for the quarter, which we are at 78%. So we're above performance, and we expect that. We expect to realize the additional $3 million once people that are on payment plans property sales and things of that nature happen. So that just gives you a visual where we are, plus an explanation of what that tax means. That goes on with the half-cent tax, and now I'm kind of telling you, hey, this is your city population, minus plus 2/3, this is how we get there. And the revenues here collected are payments received through October. One of the main things I wanted to note is like, Wendy, hey, why is it 7%? Well, the reason is that we got payments for October and November, but we have not received the final payment in December. It's actually already received, but it's going to be booked in January. So I can't report something that didn't happen. So you're a month short, which in second quarter will be a month up, So now that kind of tells you why we were not at par. And therefore, $3 million over the year, and we are receiving 251, and I give you the reason if it looks a little off and why those percentages are there, hopefully clarifying to you, like, okay, that makes sense why we're so low.
Do you think December made up the 18%?
Yes, it did,
Difference,
because it's
okay.
a steady, the change in these, based on the population and the sales tax change, we also have the factor that while we take every precaution to submit the receivable as correctly, they always come back and they'll say, this is wrong, and bill it again, and it delays when the billing will be done. So that's normally when you hear, though, the delay in billing doesn't catch up to the revenues, is we submit it, and there'll be some tweak that they say, hey, you went out 3 digits, not 4, and we have to correct it. That slows down cash flow to receive that receivable that we book in. State revenue sharing, again, it gives you the statute, any recent changes. I try to give you the percentage that the state alternates, because there's some misconception about how state gas sharing taxes happen. Again, in this case, the revenue and payments that we actually received were for October and November. December is here already, and we have it. It just got booked in January, so therefore it did not get reported on first quarter and will be reported in second quarter. I posted for you also, just if you wanted to check the math, if you couldn't fall asleep at night. December revenue being received at 32,877 and posted in the second quarter. You can kind of guesstimate and look at roughly what we expect in a month. So now you kind of keep me up to that and say, hey, okay, now I know. For the tax, we should expect about 32. Wendy, what happened this month? And it may be obviously a calculation issue or the fluctuation between the gas tax that's happening. Same thing with the sharing of the tax. I list all your notes for you there at 224,000 received at 16%. This is a calculation done by the city population with the total county incorporated calculation, and then adding 2/3 of the population multiplied by the sales and tax money. It's a nice old calculation they do. Same thing, we received October and November payments at 112, which is per month, that's the average. We are posting the December payment, which was received for 112 in the second quarter as well. And revenue collections for January have been received at 112 as well, again. So we'd received December and January, so second quarter you should expect an increase to that because we have December included in second quarter. The first 1% surcharge, revenue collections, we've only received October. That's causing the 6% received to date at 335. Payments received for October 2019 were posted in November. And then revenue collections for November 2019 have been received. We do have them, and were posted in the second quarter at 379,000. So those numbers will catch up in the second quarter. Local option gas tax, again, tax per gallon of gasoline, including the discounts and service charges, calculates out to 0.06. I give you some legislature and how that calculation comes in. And again, we have October was posted in December for $105,000, and then November has been received at $116 and is posted in second quarter. So we're still deficient to receive December, and that will post in second quarter as well. And therefore, an explanation as to why we're at 7% for the local option gas tax. Building permit revenue. These are all the building, electrical, mechanical, and plumbing permits issued by the city. Number of new home permits issued as of this date was 148, and that was actually a slow time for them right now because they are just moving and shaking. Total anticipated, they're on track and on schedule. They received 662,005 in that from the anticipated of 2,000,006. So they're tracking at 25% of budget for the first quarter. So they are at budget levels that we expected for revenue.
So Wendy, I have a question on that one. On your summary that you said that's the traditional one that you did first, on page 3, the building fund is at 13% of revenue, but this one's at 25%. So what's the difference in these two reports?
The building fund is separate, and this is from the general fund for building permits, which is
Gotcha.
separate.
Okay.
Interest revenue, I just, wanted to make you aware because it's one of those things that if you've seen budget and I've heard the questions asked, it's like, what's that? And it's, not that you all don't know that, but just kind of giving you the component that obviously as the director of finance here, it's my responsibility with the team to administer and do the investments, right, of money. So I put that out there for you and what resolution it happened in. And then just some developments that we anticipated, 767,000 due to the money we have in the bank. And we've received 529,070 in first quarter for interest revenue. So we are way ahead of schedule, and that's just because of the healthy balances that we like to keep and unrealized.
There's some unrealized gains in there as well, those market adjustments that come each quarter.
Water and sewer, it was a combination. I combined those. Obviously, these are the payments and sewer bills that are recorded into the accounts with monthly minimum water charges. They're a fixed rate. Just giving you kind of the methodology there. We are anticipating between water and sewer utility 30 million, and we are at $5.4 million. Some of this also was the posting and timing of these bills getting put into the first quarter, but we're at 18% regardless of that. So we're on track and should level out the second quarter with this, and we're monitoring the billing and the timing of those things occurring effectively. The following slide is just your expenditure in millions, and also just wanting to separate and, again, provide how we look at things and break them down. This is really informational, not really because you don't know it, just because sometimes it helps to get it in layman's term and broken out so you have a question. General government, I've listed every type of kind of category and what goes into it, so you could be like, okay, this makes sense. So, and then broke that down in millions by how much we spent for this quarter in those categories. So how much did we spend in services provided for the city? This would include financial, legal, comprehensive, your general fund, with some other options at, $5.6 million. It's 20% of the quarter. So now that gives you an idea how much did we put in. Questions that would help this graph, and the reason why it was developed is because there was questions like, hey, are we investing in public safety? And now you could say, hey, we're spending $2 million a quarter at 7%. Do we need to, why did we do that? Why not? And that gives you just a good picture to maybe pose some questions, especially when you compare it to the budget. It'll be a good tool for you to know just, physical environment, internal services that would cover our health. What are we spending money on? And this puts it in categories for you.
And you said this was quarterly, right?
Uh-huh. First quarter, yep. The data following that is then maybe, as I saw the spreadsheet kind of develop, I thought what would be interesting to you all to compare. One of it was this question that we have on population. So I just wanted to put that out, that this relates also, and you can always double check it with the CAFR when it comes out, our performance and how we've grown. And sometimes the visual helps us out to kind of answer some questions. So 2018, last CAFR report, population based on the Beaver that you've heard, that, you know, and all the statistical data that they puts St. Cloud at 45,500 residents ballpark here. Following that, the estimate, we've been very conservative, and we're keeping instead of a 5 aggressive percentage, we're doing, the average of the year since 2007 has been a change of 3.2%. So we kind of kept that methodology, and we're projecting 2019 to maybe hit 47.9 based on the Beaver. And then 2020 estimates were at 49,004. Like I said, this is just a little methodology to show you, hey, we're going up and how much the change. If you notice, just interesting facts, between 2017, we had a 4.4 net change, but then in 2018, we really had a 1.1 net change in growth, so we were kind of holding steady. So that was pretty interesting, you know, because now we're projected again to hit another maybe 5% spike in 2019, which happened. You know, the Beaver, you know, kind of reported that and proved that. And then now we're kind of expecting another 3% on top of that. So growth is the word here, but now we've charted it to kind of show you which we could maybe, the goal of this is to show you, hey, where our growth is going, how we're staffing based on growth, does it make sense? And, you know, fluctuations of maybe when cost drivers went up because of that, because we had to provide more service, more people. And the average nets here are like 2,000 to 3,000 person increase, you know, so things just fun facts. The next and final is the full-time employees over 10 years, commensurate and measured on the number of positions per population. So right now, 2020 estimates us at 701 on staff here, FTEs, full-time employees, and this is actually full-times and part-time employees. We added that this year. So we have about 14 employees covering for every 1,000 people in this population. If you notice, it just kind of helps you with trends to say, hey, we're tracking at the same increase that we're doing. 696 was the previous year. Now we're at 701. Doesn't make logical sense. We really only increased 0.3 of a point, 0.3 of a person, if you want to call it that, after we staffed. And that really indicates that while we have positions, that doesn't always mean we have them fully staffed. So we just got up to levels. So it just gives you a visual representation of what we've done over the last 10 years, and that we're monitoring that we are not just pie in the sky hiring people because we want to, but there's a method to why we do it. And finally, apologies for the size of this thing. So this is going to strain your eyes, but this is a performance since 2012 of the general fund balance, showing you unrestricted comparative to expenditures. So this walks into that lovely fund balance levels that we talk about, 12.5 currently, but that we're going to move it to 15% right now at council meeting. So obviously on the unrestricted, you see a 38.4%. That's not really what the fund balance is at this point. We're projecting what expenditures will hit, or what did hit. But this kind of keeps us on track for you to show visually the fund balance and the measure of how much we're using fund balance to fund anything in the budget that can come up. So it is in tune and track right now. We're always on the surplus side, have not been deficit. So I just want to give you a presentation of that, so you have information of where the general fund balance is at this time, and what will be added is obviously the 2019 and 2020 numbers. So that is just, you know, what you would expect every quarter, to really give you drivers and answers to things that make this presentation, and you can ask, you know, more questions. And if you have any additional feedback, if there's something that really is not valuable to you, I welcome it, so I can clean it up for you and really, you know, make this the path for the remaining 3 quarters for you. And hopefully it just helps to, it has clarified some things, and it finds some value to you. If you have any questions, please let me know, and that pretty much ends for me the first quarter review for you.
Any questions?
So maybe you hit on it, but maybe I missed it. So in the fund revenues, what is causing the building fund to lag then?
The lag?
Mm-hmm. And the revenues, it was only at 13%.
So one of the things was the deployment of Track It has really slowed us down when we did all the quirks. So what ended up happening is here we go and launch Track It and stuff, and there was a bunch of items that kind of, we had all these building permits that still need to kind of be in and posted into the system because we had a lag. We didn't know some of the things what we were going to encounter. I mean, the financial export, we needed more communication portals for Track It, so it kind of slowed that down to be able to post it and get it in. I think we have that, obviously resolved. We probably had about easily 20 items from the permitting and side to the financial back end that we had to fix, and we're probably down to 6, 10, and IT's been very diligent to do that. So that was probably the biggest factor that affected Q1 just because of that launch, and we had a lot of revenue sitting there, like checks that were received that we didn't have a means to be able to post at the time while the deployment was happening because we found errors that systems didn't communicate. And, now we've kind of fixed those quirks because obviously it made us a little nervous with, holding some revenue and not being able to post, but it was expected with a deployment.
Any other questions? All right, Donna, you're up.
Hello. All right, I'm going to go over the year-to-date and quarter-to-date returns for the investment portfolio as of December 31st. So for the year-to-date, as of December 31st, the portfolio returned 2.53%. The components of that is we had 1.2% in actual interest income or coupon payments, revenue stream coming in. And we also had a 133 basis points or 1.33% added to the total return for market adjustment. To break that down in numbers for you, we actually received $1.3 million throughout the year in coupon payments or interest payments, and we recorded $1.4 million of unrealized gain based on those market adjustments. For the quarter ended December 31st, the portfolio returned 1.82%. The makeup of that is 1.02 in interest income and 80 basis points of a positive market adjustment. That works right into that $530,000 Wendy was showing you on that spreadsheet. And the breakdown there was $300,000 in actual cash interest payments and $230,000 of unrealized gains. During the quarter, short-term interest rates continued to decline, but longer-term interest rates started to inch back up, and that helped restore the yield curve back to its normal shape, normal inverted shape. And during that quarter, we did record a modest unrealized gain based on those interest rate movements. As we've talked before, those adjustments are required for accounting purposes, but will be realized when those investments mature. So again, they're unrealized, but they're recorded at the time. And I'll be happy to answer any questions you might have about the portfolio itself.
Any questions? All right, if there is none. Any other business for us?
The only really not business, it was more informational because unfortunately we didn't have a meeting before it happened, but I just wanted to let the Finance Committee know that Dawn Murray has moved on to greater pastures, and she left us on Friday a week ago?
Yeah, the 25th.
Okay, yeah. So She's with the city of Sarasota now, and, you know, that's her plan to retire out there, and she's gone out there. So we're absorbing that still. I guess it's a weird thing, but just wanted to share with you that, you know, we
Do you have her replacement yet?
we do actually have two options that we're doing. One is that the position got reclassified for the time being for the deputy director position of finance, and we're doing that, which will have the budget capacity. And then GFOA has an option where there's a lot of financial professionals with municipality experience that you can contract out in the interim, because we really need, this is an important choice and we don't want to rush it. So we're going to probably do an interim person to come in to have the body to help. You know, and I mean, we still have contact with her, and you know, she's still has her home in St. Cloud. But in the interim, we'll cover it that way, and then hopefully take a good long look at the deputy director position, and they'll manage that the budget aspect as well. So I just wanted to share with you in case you know you don't see her and stuff, you know, because I still keep her name up and say good morning to her every morning still, so. But I just wanted to share that with you, you know what I mean? So it's, you know, she's romping and stomping out there and doing that, so. Just giving you a little tidbit what happened in between the meetings, and, but, you know, we're pushing on, so.
Be greatly missed.
Yeah.
Yes,
Good
Very
for her,
consistent.
sad for us.
I know, that's what it was. I was, you know, I told her that, and I said, well, you know, I mean, I guess I hope it goes well. You know, so. But I miss her a lot. So you know, she was fantastic. So, but like I said, we still have contact with her, and you know, I mean, she left a really sound house, so we're confident in that, and we'll see if all her teachings passed on, and you know, we'll adapt. But like I said, that's what's going on currently, and we've absorbed that, and you know, pushing on. So.
All right. Well, thank you for that information. Our next quarterly meeting will be April 28th. So mark your calendars. And anybody have any comments or concerns or questions you want to bring up? If none, I have nothing in the audience. Meeting adjourned.
Yeah.
What are we going to do for the next hour? I didn't